Hey Andreas, this is Ryan with TrendLizard.com. I got your email to look at the third stock for this month for you. We're going to take a look at Bayer AG, which is BAYRY, on stockcharts.com and I think other places as well as far as the kind of the OTC or the ADR receipts go. It's a German stock, so not entirely sure how that works, but we have the data dating back to 2002, and we're going to take a look at it for you from there. So basically, what we see here off of its inception here in 2002 and then the low it ultimately set in 2003 is trendy upside movement. Now, the implication is that this was a large five-wave move that we don't see all of it. It was incepted here. Doesn't mean this is the start of its Elliott Wave pattern. Probably had a first wave, whatever the case may be. It's clear that whatever happened to the upside here completed in, I think, 2015 and has since undergone a much larger pullback, a much larger correction. Now, if it was just going to be a correction of what we saw to the upside here on the chart, should have found support in this yellow area. It is not. It is traded below that area. So everything you see to the upside from its inception to its all-time high has been retraced by more than 61.8%. That's pretty substantial. Also of interest is the fact that it is still in that down move. So despite this beautiful up move that we had here, whatever is going on now and has been going on for the last 8 years or so is still going on. And that's not a good thing. That's not the type of thing that we're looking for. We're trying to look for things that are in uptrends. And this does not fit that bill. But let's go ahead and dive in and take a look at this downside action here to see if we can figure anything else out. So when we look at the pullback itself, this is where we see why there's good reason to be concerned here. And if you look at this pullback, it takes a trendy form. You can see a 1, 2, 3, 4, 5. 5-wave moves make up trendy moves. And we're trying to trade in the direction of the trend. So unless we're trying to short this guy, it doesn't look like a good opportunity based on the fact that currently the trendy down or action is happening to the downside. And if you look at every down leg, plays out as a 5-wave move, everything is pointing down. Now, if we look at the recovery off of the 2020 low, it's been a decent recovery. It moved basically from 11 up to 18 before giving a chunk back currently. But if we zoom in on that action, this looks like counter trend movement, very clearly so. You can see an A, B, and C move. Now, 3-wave moves are the stuff of counter trend patterns. So if we're seeing 5-wave moves to the downside, a move that moved below a 61.8% retracement of all this upside action here, and then we're also seeing the biggest recovery it's posted turn into a counter trend move, it's pretty hard to be bullish on this guy in any objective way. And then if you look at this yellow support area, if this pullback was just correcting this up leg here in 2022, it makes sense for it to find support in this yellow area. It is not. It has continued below that area. So it's hard to be bullish on this guy in any objective form or fashion. And if we go ahead and zoom in on this downside action here, this also looks trendy. So again, on every time frame, we're seeing things that suggest lower prices are in the works overall. Now, the only potential bullish kind of thing you could squeeze out of this is the possibility that maybe this 5-wave move completed and this is just wave A of a larger ABC recovery that will ultimately end up into this yellow area. That's possible. That's something that's not predictable. That's the problem with counter trend moves, is that they are not predictable. Maybe that happens. Whatever the case may be, we don't like to trade counter trend moves. We want to get in on trendy moves. And I think overall, this trend is pointing down and not up. So my advice would be to stay away from it. If we go to a short-term time frame, we see this trendy downside action here. The thing that would point to a larger recovery to the upside would be a move above 1625, which would essentially be better than a 61.8% retracement of this down leg here. So that's the only thing that would turn us bullish on any time frame, and that would just be a shorter time frame because, again, it would look just like a counter trend recovery that is growing, not the start of a new trend that's a sustainable, good play. So that's my advice. I'd stay away from Bayer. Doesn't look like something that's going to continue up overall. Hope that's helpful, Andreas. Have a wonderful week ahead. As always, let me know if you have any questions about this analysis, and we'll talk to you very soon. Take care.